When the United States announced a new round of tariffs against China, the expectations were straightforward. Economic pressure would push China to back down. But that is not what occurred. Instead, China countered with a policy that had been years in the works, targeting not only American products, but also the base of America's economic might. They have put levies on important sectors. Yes, but just on the surface. Behind the scenes, China is securing crucial supply chains, consolidating its hold on rare resources, and making partnerships with U.S. rivals to reduce America's worldwide power. This is not about a quick reaction. It is about changing the balance of power throughout time. Today, we'll break it all down. What's happening? Why does it matter? And how is it affecting the global economy? In February 2025, the United States sparked economic tensions by imposing fresh tariffs on more than $60 billion in Chinese imports. This was not a snap choice. It was part of Trump's continuous efforts to revitalize American industry. The new tariffs target crucial industries such as computer parts, electric car materials, and essential resources required by contemporary technology. The objective is to get China to change its trading policies. But what's the reality? It elicited a response that extended far beyond basic trading. While the United States characterized it as preserving American employment, China regarded it as an attack on not just its economy, but also its global stature. China's response was not hasty or impassioned. Within days, they announced tariffs on $35 billion of American commodities, with a concentration on agriculture, energy, and automobiles. However, it is not only about what they targeted, it is all about where. China concentrated on sectors related to significant political regions in the United States, such as soybeans from the Midwest and oil from Texas. It wasn't simply about damaging the economy. It was about applying pressure from within the United States, knowing that harmed firms would fight back against these regulations. But that's only one part. Aside from tariffs, China signed new trade agreements with nations such as Brazil, Russia, and even Mexico, seeking new suppliers to minimize its reliance on American products. While the United States focused on putting pressure on China, it secretly developed a new tactic. While most people focused on tariffs, China secretly employed one of its most powerful economic tools, rare earth minerals. These are required to manufacture cell phones, electric vehicles, and even military equipment. China controls more than 80% of the global supply. Following the increased U.S. tariffs, China warned that it may prohibit the shipment of certain materials to the U.S. This wasn't simply a warning. It was a wise decision to put pressure on industries that the U.S. relies on for both business and security. Consider trying to develop sophisticated technology without the basic resources required to make it functional. That is the type of subtle but effective pressure China is employing, not with loud threats, but with control over the resources on which the world relies. China did not stop with agricultural items. They targeted America's energy industry, imposing higher levies on U.S. oil and liquefied natural gas, LNG. This is significant since China was one of the largest consumers of American energy in recent years. The impact occurred quickly. U.S. energy businesses lost contracts, shipments were delayed, and profitability fell. At the same time, China altered its focus, signing energy accords with Russia and Middle Eastern countries, as well as increasing its own energy output to reduce its reliance on the United States. This is not a short-term problem. Even if tariffs are eventually lifted, the new energy accords may remain in place. This means that the United States will lose revenue and influence in one of the world's largest marketplaces. While things like steel and soybeans receive attention, the true battle is over technology. The United States attempted to limit China's access to modern technology by prohibiting the sale of critical computer chips and preventing businesses such as Huawei from doing business with American corporations. How will China respond? Invest extensively in their own technologies. To lessen reliance on U.S. technology, the government invested in developing their own computer processors, increasing artificial intelligence, and establishing speedier 5G networks. But here's a twist. These moves may have strengthened China rather than slowed it down. Chinese technology businesses are increasingly developing goods that can compete with, if not surpass, those of their American counterparts. This is no longer merely a commercial dispute. It's a competition to discover who will shape the future of global technology, and China is bridging the gap quickly. China owns nearly $800 billion in U.S. federal debt. While selling everything at once would be detrimental to China, even little adjustments in how much they buy can have a significant impact on the global economy. Following the increased tariffs, China discreetly began buying less U.S. debt. This has a knock-on impact, making it more expensive for the U.S. government to borrow money, perhaps leading to increased interest rates on items like house loans, vehicle loans, and credit cards. It is a subtle sort of economic pressure, yet it is highly powerful. The United States relies on countries such as China to help fund its debts. If China pulls back even little, it causes financial concerns that cannot be solved by tariffs. One of China's wisest moves? Developing closer links with other countries. While the United States increased tariffs, China signed new trade agreements with the European Union, Southeast Asian countries, and strengthened ties with Russia and Latin America. The aim is straightforward. Reduce reliance on the United States while strengthening China's position in other markets. It is not only about avoiding tariffs. It is about establishing a global network in which the United States has less influence. This implies that American firms will lose more than just Chinese clients. It means confronting new competition in markets where the United States formerly had an edge. As China expands its global position, American corporations may struggle to keep up. While the United States and China dominated headlines, Canada and Mexico were coping with their own issues. Both were hammered with U.S. tariffs, prompting them to counter with their own duties. Canada targeted American agriculture products, while Mexico imposed levies on steel, pork, and alcohol. But this is where things become interesting. As tensions rose, both Canada and Mexico began strengthening commercial ties with China. This trend has the potential to diminish America's influence in its own area, transforming previous close friends into countries that rely less on the United States and more on China. Tariffs are not the only significant consequences of this trade war. This is how global supply networks are being altered. For years, the United States and many other nations depended largely on China for manufacturing. Companies, however, are reconsidering their strategy as tariffs and tensions rise. China saw it coming. They've been investing in nations such as Vietnam, Indonesia, and even sections of Africa to establish alternative supply chains that aren't reliant on U.S. alliances. This not only helps China avoid future tariff threats, but also strengthens its relationships with emerging economies. For American businesses, this entails greater expenses to relocate manufacturing and longer adjustment periods. It isn't just a temporary setback. It represents an irreversible shift in how things are produced and transported throughout the world. This trade war has disproportionately impacted American farmers. China was a major importer of U.S. agricultural products such as soybeans, corn, and pork. However, following the tariffs, China reduced its imports, turning to nations such as Brazil and Argentina instead. For farmers, this meant harvests with nowhere to go, dropping prices and mounting debt. Some obtained government bailouts to cover their losses, but this was just a temporary remedy. The true issue is long-term. If China finds new suppliers, they may not return to American farmers, even if tariffs are eventually eliminated. This is more than simply an economic issue. It is also political. Farming communities are critical voters, and their dissatisfaction is putting pressure on U.S. authorities to reconsider their strategy. When countries impose tariffs on one another, it affects more than simply enterprises. Everyday people benefit as well, thanks to increasing commodity prices. The trade war has raised the prices of a wide range of things, from electronics and apparel to food and household necessities. Businesses experiencing increased import costs frequently pass those costs on to customers. Smartphones, for example, are now more expensive due to the use of Chinese components. Groceries from overseas vendors used to be more expensive due to agricultural tariffs. It's a hidden tax that appears in the checkout line without most people knowing it's related to global trade disputes. Global markets despise uncertainty, and the US-China trade conflict has generated enough of it. When additional tariffs are imposed or trade discussions fail, financial markets respond, often with significant declines. Investors are concerned about more than simply the immediate costs of tariffs. They are concerned about the implications for economic development, business profitability, and the stability of global supply systems. Big firms that rely on international commerce, such as computer behemoths and automobile manufacturers, frequently see their stock values move dramatically in response to the most recent trade news. This volatility affects more than simply Wall Street. It has an influence on individuals' retirement funds, pensions, and investments. A volatile market implies greater risk and less financial stability for millions. While the United States and China are at the forefront of this trade war, the consequences are worldwide. Countries that rely on commerce with both are feeling the pressure. For example, Southeast Asian countries are experiencing supply chain disruptions. When European firms import commodities related to US-China commerce, their expenses rise. Even emerging nations that contribute raw commodities to China suffer when demand falls. This rippling effect indicates that the trade war is more than simply an issue for two nations. It slows global economic development, raises expenses throughout the world, and creates uncertainty for firms and governments everywhere. When two of the world's largest economies collide, the repercussions reach all corners of the earth. So where does it all lead? The fact is that nobody knows for sure. Trade wars are easy to start, but difficult to terminate. Even if the United States and China achieve a new agreement, the damage to economic connections, supply lines, and political trust has already occurred. China is obviously intent on becoming less reliant on the United States by investing in its own sectors, forming new partnerships, and pursuing global leadership in technology and finance. The problem for the United States is to sustain its economic dominance while confronting increased global competition, not just from China, but also from the new networks that China is developing. The major question is about more than simply tariffs. It is about what the next chapter of US-China ties will be like in a rapidly changing globe. The US-China trade dispute extends beyond tariffs. It is influencing the future of the global economy. China is not reacting arbitrarily. Each step is part of a wider plan to change economic power. The fundamental question is, who is positioning themselves to lead in the years ahead? Is the US approach remaining steady, or is China quietly gaining ground? Please share your opinions in the comments. I'd really want to hear your thoughts. If you found this analysis useful, please consider subscribing for more information on global events that affect all of us. Thank you for viewing, and I will see you in the next one.